Hi, I'm Paul Edmondson, CEO of Arena Group. Thank you so much for tuning in to our Q2 earnings call. We're very proud to report that we had record revenue in Q2, a 67% increase over Q2 of last year, and we posted a record profit. Today, we're joined by our largest shareholder, Manoj. Manoj, thank you so much for joining us today. For you, as our largest investor, what's the most important thing to see from the company now?
Well, there's only a couple of things that are really important for any investor. One is growth in revenue, and the second is earnings per share. So if you're growing both of those, then you're doing great. You know, one of the biggest things to me is trailing 12 months earnings.
Yeah.
Right. So trailing 12 months earnings at the end of last quarter were 12 cents a share. Right.
Mm-hmm.
Today they're over 60 cents. If you look at that 30 times, which is the average of the Russell, you'd be at $18. And we're what, 6.5, 7?
Yep.
No, let's say even 20 times, you're still at 12.
Yep.
So we've got a long ways to go in terms of recognition of what we're doing. Now, we're early on, so people don't know.
Mm-hmm. You're hitting on two of the key things, profitable growth and earnings per share.
Right.
And those are the key metrics that we're really focused on. And we expect to continue to see those two things grow through Q3 and Q4. We recently initiated a stock buyback program, said we'd purchase up to 3 million shares over the next 12 months.
That's right.
What do you think about this?
It's a simple thing. It's the old thing, buy low, sell high. So if your stock is undervalued, you should buy it if you have the money. I mean, today, as you know, the Russell 3000, which we're a part of, average price per earnings is 30. We're going to be at 10.
Yeah.
How is that that makes no sense.
Yeah.
I want to be a buyer at 10.
No, we agree with that. We see as our stock being a tremendous value, and because of that, we would like to be in the market purchasing shares. We have some questions that have come in, and thanks again for sending all those questions from the various folks. We're going to make this a speed round. You're going to get an investor take and a CEO take. So first one, was all your revenue growth for Q2 and the growth that you're projecting for Q3 organic? So we really started rolling out our entrepreneurial publishing program, really ripping in Q2. And it's all been organic. We did do our first acquisition of TravelHost. We're looking to try to do an acquisition, 1 to 2 per quarter going forward, looking for really, really great value. These are seeds that we've planted. We have other properties that we've acquired over the last, call it 12 months. And those are starting to show a little bit of fruit for us, but we're gonna be hitting the gas for men's fitness. We launched another pet site. We've got a number of sports sites coming out as well.
Well, to me, it's we cover finance, which is TheStreet, and lifestyle is Parade, and we have Athlon, which is sports. We have Men's Journal, which is a separate demographic. So there are some demographics that are really large and really incredible amounts of potential, and nobody's really doing them well. So I think, like for example, TravelHost, well, everybody wants to know where to travel, all of those things, and the experiences of hundreds of writers we can use to do that. So I think that's a great one. And then since we have figured out how to make this whole digital thing profitable, doing one a quarter should, double and triple the company in the next couple of years.
Yeah. So this is a good segue into question number 2. As an investor, what do you want to see from the company now?
Well, as an old-fashioned investor, I like profit. Profit needs to grow, not just revenue. So what I want to see is, in this case, new brands added, new growth added, but done in a way that's profitable.
Yeah.
Right.
Yeah.
So it becomes a solid business instead of fly by night. There's a lot of companies right now that are in our competition area. They're either all losing money or they're just marginally profitable. They haven't figured it out. So, which is what you've done, is you've kind of figured out a way to make it profitable.
Right.
And kind of that's what I'm looking for.
Yeah. So how many properties had the entrepreneurial model in Q1 and Q2? And are they all operating under the model that'll impact Q3 and Q4? So all of our major brands, Men's Journal, Parade, TheStreet, Athlon Sports, all have the model running. We also have the model running on Men's Fitness, Parade Pets, Pet Helpful, and some of our other up-and-coming brands as well. And in Q2, we did see pretty dramatic growth. So, for example, Men's Journal increased about 479%, delivering about 165 million page views as just one of the markers that I thought was a really good success story. TheStreet also hit record traffic in Q2 2025. So it averaged just a hair under 90 million page views per month, which is pretty incredible for where the brand was before. So we're excited about that. We are definitely leaning hard and going quickly. Our debt matures next year. Do you think you can refinance the debt rates at better than equal to your current rates? So this is a great question. We're actively in discussions with banks. We do believe that we're going to be able to get a refinancing done in short order. That will be in the best interest of the company.
Just refinancing the debt will add somewhere in the 8 to 9 cents per share, earnings per share. So that's for us, that's a lot. And then, of course, as we reduce it, it'll add to earnings per share also.
Great. Many investors are unaware of the dramatic turnaround that we've had at Arena. Will you be doing more investor relations? So first, this is the start of investor relations. We do plan to add some traditional, some more traditional things, as well as you'll continue to see us on social media. We're going to be doing an AMA with Manoj, hopefully in the September timeframe on Reddit. We'll also be attending the Lake Street conference and looking to attend other conferences as well. And in third quarter, we're going to start with our first traditional call.
Okay. And look, to me, it's really simple. If what the market demands, you got to give it to them. So if they want an earnings call, fine, we're going to have an earnings call.
Analysts have said that the company would benefit from more shares in the free float and less shares held by your controlling group as our largest shareholder. Under what circumstances would you be willing to sell some shares?
Well, I guess first is not at 10 times earnings. So obviously, I'd rather be a buyer at this point. But I think the market is correct that we really shouldn't hold this larger portion because it hurts overall market efficiency. That if the share price gets to be somewhat reasonable, then just for the sake of the company and its shareholders, I need to divest some or issue more shares in the marketplace. Either one, we may do either one.
Okay, that is wrapping up. Thank you guys for tuning in. Manoj, thank you so much for coming in and talking today.
My pleasure.
And for being an investor in Arena.